How are you? It's the Market Sniper. Glad to be back with you. We've got a real update live, really hitting right now. In fact, by the time this is out, it may already have begun happening. I don't know. You will see. The future is now, and you'll be seeing it in action. But I'm going to be showing you a number of key things that I really want you to get right here on this Friday at the date when, before I go in too deep into the weeds, you will be getting a data release on PMIs, service-based PMIs, and also, right here, there it goes, flash manufacturing and services PMIs. My prediction is these are going to undershoot the forecast expectations. Here is the forecast expectation, super fat cookie. Ooh, that is fat. Yeah, those are the forecasts, 49.9, which is actually contractionary to start off with, and services is mildly non-contractionary. I expect that to undershoot as well. Why would I say that? Because technically in the charts things are looking to me like they want to move. That's right, this is not a data forecasting channel, as you know. This is macro technical, particularly on the Market Sniper, the core markets such as sound money, silver and gold. I'm going to be telling you why silver has broken early and is tipping its hat that these numbers are going to be undershoot to the downside on an already contracting manufacturing, but not a recession, remember. Don't say recession. And then services may not be that far away from a contraction themselves as well. Remember, 50 is the magic number. Below the line means you're drowning. Okay, let's get to the charts. Why the three flags? We gave you a YouTube not so long ago. Let's go find the YouTube. Here it is. There's a crazy man in goggles talking to you about the key opportunity that he says is coming soon. Now he's back and saying it may well be today on the key data that's going to be coming out today. And the market might already be flagging exactly that. And I use that word, flag, wave me a flag, flag. No, not the rainbow, many colors, LGBTQN plus flag, not the Ukrainian flag. No, not the Zionists to the sea and the ocean flag. None of those flags. A different kind of flag, a positive, non-geopolitical flag, and a technical flag that is going to take precious metals to the upside. So what did this video say? It pointed out this macro chart about a flag largely over here. That's what it said. It's still up. All our videos remain up, by the way, unless they're banned. Then they come down. Doesn't happen too often. We don't want it to happen too often. We want to survive. Remember, fight the algorithm. Give us a click, like, and subscribe. We gave you that flag, key flag, as a continuation factor that will take you to the gateway of the $45 to the $50 mark. Remember, that on the even bigger time frame, on a multi-month, 6-month candle chart, is actually the third visit. That would be 1980s, during the Nixon into Volcker era, 2011, and then soon to be, possibly, it won't be overnight, of course, but potentially commencing soon, and could see you end up there during the course of 2024 or any other, maybe a bit after that, who knows, as part of reaching the third time to the gateway of the 50K. Flag number one, your macro flag. You want to travel in the macro direction. Go with the stream down to the sea. Do not go upstream against this current. That is really hard. Also covered in this video was another flag. Let's take it off and show you again in this video, was this particular flag. You can see the daily. So we've dropped from the bigger time frames right down to the daily, and we said, hey, by the way, you're running into a key level here on the daily after you had already triggered another flag on the lower time frame. I'm not going to search for where I cover it in the charts because you can already see it in here, that saw a little flush out to the downside. I remember explaining that to you, and is going up here. So where are all those potential targets going? Well, that could be the fractal moment when you took out that flag and begun the journey to the upside, that you suddenly met this key capping descending grind line. We are going to be checking in right now on this particular technical setups that we've just discussed in the previous video. How is it looking now? And why I say the data today could mean that this coming soon. Don't forget to like the vids. Look at that, 950. What a lucky number. I gave myself a like. That's almost narcissistic. It feels like self-flagellation. A little bit of, getting down and below the belt on yourself. Please remember to do it for me so that I don't have to get so unseemly, uncouth here on YouTube. Anyway, nonetheless, 63 comments. We love it. We love your interaction. What do you think is going to happen on the manufacturing and the services PMI number? And it's probably going to have already happened by the time the video goes out. Tell us how wrong we are and how hopeless we are in the notes below. We love to be told how crap we are. And if we happen to be one of those rare occasions where we get something right, you can kind of go, you're just lucky, you got one right this time. But please do tell us, and tell us also how high do you think the silver market is going to go. By the way, we've called gold bullish. We also dealt with this on the Twitter feed that went out early on today. If you're not following the Market Sniper, you wouldn't know. And in fact, we said something on crypto as well. If you're not following the Crypto Sniper, you will already not know. So don't forget to follow those Twitter handles. And in fact, our community got it first thing this morning straight from me, and have had charts, a personal update with voicemail, and subsequently a full video explainer to them as to why. And now you are listening to this and you pay for time. You pay for information. The international bankers put their servers right next to the Fed servers with a gold wire so that they can get one fraction of a second information before you do. And that's a whole damn difference of all forms of NFT mischief, let me tell you. So never underestimate getting the information and time. Entries damn well matter. Some people have bought into silver today on a leveraged trade on a structure that I'll be showing you at the low and mid 23s, not low 23s, mid 23s, and now it's already above 24. So let's get into those charts and explain away what we are discussing. So here's the big structure. Here is the big structure. You will note that there's been a big calming. It's just take off the eye. You will see this. This is your pointer to 45. And that hasn't changed a huge amount on the initial overview compared to where we are. None of that has changed. What if we drop down to the daily time frame and have a wee peek? And once again, let's reframe. And here you will see we have been on this dotted red candle. In fact, when that video was out, it was already at about 24. It was already at around 24. That's right, it was at 24. Can you believe it? And then it pulled back. It pulled back, and it's creating some mischief here. You can, of course, see the flag break that occurred here after the flush out on the bottom. Not a great deal has changed there. It's time to drop a little more. And boy, we're going to drop right down to the minute 30 stroke hour time frame and show you why you get fractals of setups at key capping descending grind lines. Don't forget this old fellow, touch there, touch there, touch there, touch there, and touch again here. Of course you get a wee pullback straight after our video when it was at a localized high. Of course everybody comes and tells you how wrong you are, but doesn't see the big picture for the trees. Here is the target for the bull flag, bringing you up to the next line that it will shoot through and pull back through, and everyone tells you how wrong you are again before the next move up that will take you a break on the bigger structure. The full red line, my friends, is the macro flag that I skipped past so quickly because you'd already seen it in the big chart. You'd already seen it on the weekly time frame many times. In short, one small domino knocks over the medium-sized domino, which knocks over the full-sized domino that generates a legacy of targets forward into the future with real geometry done technically by the macro technical trader on precious metals, oils, the traditional markets, yours truly, that very few people are giving. And that's how you build your way to wealth, friends. You don't just trade a macro pattern. You trade a macro pattern across multiple time frames that gets you in earlier with a tighter stop that allows greater size. You multiply your way to wealth using patterns within patterns within patterns, and that is the specialty of the Hunt Volatility Funnel method, which is in the very first link below that you too can book so that you can have a call and a chat and join the community and multiply your way in wealth with all the things that still have to go up when all the other things go down. That will give you an opportunity to counter the great stagnationary forces of a decade of negative income growth for most people in the jobs with really high inflation and everything that's going down. We are giving you the tools to fight the devaluation of the currency you paid in and the stagnation in your income relative to the elite classes. I shouldn't call them that. Anyway, so let's pop on down to this lower time frame so that you can see it immediately. So without any more, let's drop into that lowest time frame. We go slowly into the 4 hour. There is the flag that we were telling you about. And what do we have here? Well, friends, we called this before this candle. This candle is only a 4 hour candle, and that only came at 1 o'clock today. In around about 8, 9 o'clock this morning, we were already informing our community that we had. Wait for it. What did we have? Let's clean our face. Drop it down to the 1 hour. We had what we consider to be the perfect setup at a key capping descending grind line. That's right, this very line is coming from the top of one of those flags. Remember the dashed line? What typically happens there? We made the break and then you had the pullback. Continuation pattern structure. That original video is correct. There is something coming, and now we are updating you that there is on a small time frame a structure that meets all our usual criteria on a lower time frame that is actually giving you a super low entry stop and an entry round here that you could have been in this, and it shouldn't see for a sustained period and possibly never that level again. Plus there's targets generated. That's right, there's targets generated by this, but this is a knock-on smaller time frame that begins or continues, I should rather say, the move to the upside for silver. Silver is up, gold is up. We'll show you the gold as well, but here's where the gift was. Were you in a community that what specifically for the volatility, funneling, constriction, our specialist setup that we train you on and set you up on, and how we explain at key levels of capping descending grind lines within pattern structures where you are regularly rejected. Eventually you are rejected only a small amount and you wind up to truly say goodbye. All this happening before the data comes in on PMI. The insider, my friends. The insider, the forensic detective of what the insiders is doing, HVF method, first link in the detail below. If you ain't doing it, you ain't getting the insider news. And you know what? It ain't coming in news, it's coming in charts. They show you what they do by following the money. This is the true wealth building aspect of following the money, friends. This is not investigative journalism and just finding out who's paying who. That's interesting and it's important, and it gives you the whole Zio cartel gift of who's doing what and understanding reset. It doesn't make you money. This right here is where you make the money. This is where you see, and you don't get to be the first, but you get to be the first 5% before even data, which they are fighting for with gold-plated server cables right next to the Fed's cable to get 0.1 fraction of a second. You get way before that, an entire half day before the news is even released as I'm speaking. It is 4:41 and that data is likely to come in shortly. Actually, I think it's for what time are they going to give it to us? 45. If we've got 4 minutes before that news comes in, guys, and here's the call. 3 minutes 35. In fact, here's the call. In fact, I'm going to record this. I may as well. We're going to be up for 3 minutes. I'm going to continue the technical assessment. We'll come back to this. Unders 49.9, unders 50.4. The insiders have spoken. I'll be shocked, can always be wrong. They come out really great. Guess what will happen? Slam back down. Slam back down. That's what's going to happen if I'm wrong, guys. Hands up. But I'm betting those guys that are moving markets with real money before the data's out didn't do that because they haven't got some form of an idea how that's going to turn out. Anyway, we'll come back. Tell me how stupid I am in the comments below. Please remember, we love all your comments. It's great. And tell us what you think silver will be by Christmas Day. I'd love to know, what is your forecast for silver on Christmas Day? So back to that chart. Here it is in setup. And of course, why not? Let's use beautiful in custom little indicator that is in work, courtesy to awesome programmers and everybody else. Where will this particular structure give you? Well, this is already pointing just on a small time frame to a 24.6. Okay, 24.6 in target, guys, and then move across, move across, move across. The flag is pointing to 24.8. And the top of the big, that weekly roof capping, descending grind line, continuation pattern on silver is sitting roughly, if you took that long, in and around, let's pull it down, in and around here is around 24.87. Let me tell you, this is one of the tightest clustering of multiple targets. That is not the time to rush in FOMO long, because you'll probably get a wee spike out and then you'll pull back, much as you did here. Who knows? Or if you're really lucky and you were silly enough to FOMO in at the 24.6, 24.887's level, you may be lucky and it could just continue to pump. It does sometimes, but that in the long run is not the strategy. Real technical aspects with a stop right there where you could have been just under 23.6 for your stop. You've been triggered in over here. You could have been early. Super low volatility was the key. We are those that understand the value of low volatility in price behavior. And you have to use multiple time frames of analysis so that the cheap entry is here. You thought you'd missed the trade because you didn't get long here. The markets actually love you, guys, but you ain't looking. It keeps throwing gems on the ground in front of you to pick up, and you are standing on top of them. You could have broken into this trade with a stop right there, and you could have bought in this low volatility range on our midpoint, and you would have been in an excellent potential trade that could take you to 24.6, could take you through to 24.8, and could then do the run through on that big red line. Don't forget, this entire wind up is occurring. Let's use little boy Pippi Blue, all occurring on the other capping descending line that you also push through and then pull back, but this time much smaller pullback. That's why in the previous video we said once, twice, three times a lady, and then we trans, yes, trans, I'm coming back to being a man after being a girl, and that is the great crossing of the divide, not of gender, but of a real move to the upside that will be seminal, and it's a beginning of the small dominoes knocking over the medium-sized dominoes that knock over the large. And if you can get in on small patterns into macro moves with tight stops and hold those positions open-ended, not just for this target, but right the way to the $45, $50 range, can you see? You might need to be patient. It's not going to happen tomorrow, but you've brokered and broke into a very powerful macro trade with an incredibly tight stop. Would you like to know the risk reward of jumping in on this HVF? Let's do it. Let's do it for friends. RRR is true value. Let's do it for friends. So you would be going long. Let's say when I was updating during the mid piece, you managed to get long at 23.72. Okay, quite easily obtainable. And where are you going? You know where you're going, because we're going to give you through the 45 to roughly the 46.7 where we have targets. But let's just, let's leave it there. Let's not go $50 or anything crazy. Who knows? These trades can fail, guys. It's still just one unit of risk you take. You do not swing for the bleachers and go absolutely insane. It is not how it works in real trading opportunities. So put it through there, run this to, wait for it, 46.7. I won't tell you why we are using that number. You can see 45. In fact, let's just do it to the number that you see. This is a macro weekly patterns top target of 45.09. That is your risk reward ratio, guys. 161.83. Now, of course, nothing's been achieved, and of course it can fail. It's what are the odds of it failing? You've got to say, so close to the price behavior on the downside, the stop, you're more likely to scalp a loss than to make this ridiculous move. But if we get a further strong move and those flags are all made, and now you're at the upper end of 24 and you run 25, and you then end up holding that, this could churn for a while. It doesn't mean you make the profit in a straight line in a single day. This could occur somewhere there. You've landed 161. That means if you had risked $1,500 on your 150 grand account, you would make yourself $161,830 less whatever your trading, broking, interest, collars now, largely you doubled your account. How do you double an account without blowing the rules of money management? Super tight risk management at a point where you actually have a fighting chance of surviving, with multitude time frame of targets that you hold and break and enter into a macro trade on various low time frames. And we've been sitting waiting for this, and you have to watch that market across all time frames and to recognize that this is where you expect a fractal. Why? Because we have experience in specializing in doing exactly that all the time. That's why we're the only guy right now talking about a fractal upside HVF inside a flag that will generate a break of the smaller flag that will break the medium time frame flag that could take you to the macro flag up at 46. And all this excitement could all still fail, but guess what? You're in with a fighting chance on 1 into 161.83 on a silver bull market that'll take you back up to those third highs. By the way, it could pop through and go quite a bit higher. It may not stop and pull back just because it's the third time, but let's say it all ends there, and then you have a year of pullback and benign, not so good markets. Okay, that is the key value right here in what you've seen, guys, in terms of what we do. Plus, as you can see, we're developing a nice tool. It'll only cost you $1 million to buy because you're not in the community. I'm sorry. We beta testing it and all of that. Sorry about that. But you know, the people that love us and respect us, click the first link below. Anyway, I'm being a bit cranky today. It's the coffee, by the way. Guess what I did today? Little cold water submersion. Cold water submersion in a tidal pool with a bunch of mates that also understand it. And then we had three. I was so cold, I had 2 oat coffees. And now what do you get? You get me jumping up and down like Robin Williams on crack. I'm sorry about that, but you know what? Let's have some energy. Let's have some fun. It's Friday. It's the weekend for many people that toil during the week. How nice it is to never feel that I have that Sunday depression and that Monday depression anymore. I can tell you, there is a life outside of toiling for your income and wages, and part of understanding the Great Reset is part of getting you the freedom you deserve. This is the 3 flags as to why silver is going to move immensely, potentially. Even if wrong, I will eat that 1 unit of loss just for being in the run for the 161 of gains. I promised you gold, so I'll do gold. In fact, the first update I gave on the community is gold. Gold is the God market. There is gold, and you can see him or her there. I don't know which gender to give it. I might offend somebody, but there we go. Super low vol, guys, super low vol. I actually took a little bit of gold in the morning in that low volatility. We got news coming in, and of course, the minute we run the 2K, little bit of pushback. Wait for the number. Did the number come in disappointing? The 3 minutes are up. Maybe it didn't give me what I said it would give me. I could have been wrong because gold is selling off. Well, it's kind of half right, half wrong. One of them underperformed. The manufacturing is deeply, deeply down. However, they are claiming service economy is growing. We've gone from 50.4. So we were wrong on the service, we were right on the manufacturing. And you know what? Services are a fuzzy little piece of BS if ever I've heard it. It can be whatever you want it to be. But anyway, of course I'm going to call foul on the one I'm wrong about. We got one of those data points right. One is red, one is green, and possibly the market was expecting worse. So what happens? You get a little pullback then, and then it shrugs off after an hour of the data, and you go into the Friday close with silver and gold both pushing strongly higher, and you start the new week with, guess what? We don't want this fiat stuff anymore. We need more of the real money. So we talked until the news came in. One we're right, one we're wrong. It wasn't the ideal result. It wasn't a complete fail, but it's decent. We promised you the gold market, so let's get back onto gold. It was a shooting star. It's already coming a bit back up. I think the market is going to let go of the 2K and push a little bit higher this time around. And I think we could see good progress, and I expect in the new week for that to advance even further. Don't forget on gold, weekly time frame. In fact, we need the monthly for that one. maybe the 2 weekly. Let's go halfway in between. You've seen this one before as well with us quite a few times. So there's your once, there's your twice, there's your 3 times, and smallest pullback. There was your first pullback. There was a huge second pullback, dollar dominance during that period. And here is your smallest channel pullback. By the way, that was a great signal. And this is your clustering around the border. Gold is sniffing a cheeky little line. That's right. It could get bouncy after this. It could get a little bit like it wants to party, like there's no tomorrows. Who knows? Who knows? Who knows? Anyway, it's looking good to me. And silver, I suspect, is going to follow, and with a little multiple of success. We've also got the gold-silver ratio that we often check you in with. And how's that looked? Gold-silver ratio has fallen from the 87 levels it was before. Let's clean our face. Boom. Let's also reduce some of the noise in all the magic lines that are here. This rejection is continuing to turn into, for the fortnight, and we are in the second half now of November. This looks like another negative fortnight. And we've got another dashed red line that is looming large and keeps climbing up. The break of this line, my friends, will be the beginning of real momentum for the gold and silver markets, particularly silver. You could bounce a little more, you could carry, but that is something that's coming. That was a huge rejection over there, and there is follow through in the second fortnight. There remains 6 or 7 days still to go, so it's only half the data baked in. I suspect, in my guessing mind, that red candle extends further down with the remaining days available. So there you go. It's time to book a call. This video is up. Let's see how it does in the new week, how we finish today for the gold and silver markets, how we start the new week into the data that has fallen. The one upside of potential softness in the macroeconomy is the likelihood that people are going to fear the next quantitative easing, printer. That will be the driver behind precious metals starting its next major upleg. Once we break this dotted line over here, fine people, it is my expectation that it would be rather abrupt progress through to the 65, which would be the next point of stall, before further abrupt progress right the way down to the target that is 32, before further progress to a single digit number. That means below 10. Okay, those are all the forecasts we've given you long into the future. Plenty still to happen, but you could see the loss of strength on the gold-silver ratio by the wicking across the top, the rejection. It was no longer being okay to happen. That is it. I'm done with this video. Thank you for sharing. Thank you for liking. Thank you for hitting the thumbs up right now. Thank you for remembering to subscribe and say notification always, because we get a little bit banned. We're a little bit naughty. Anyway, what can we do? We can't help it. We were born that way. Thanks so much for following. We'll catch you next time. Bye for now.